And joining me now for a closer look at what's playing itself out on that market is Rob Towell from Sasfin Wealth. Thank you so much for your time, Rob. Let's actually start dissecting that SA inflation print that we did get this morning for February, ticking up 5.6% from 5.3% in February. This is actually the second consecutive month of growth in that print. What scene is this print setting?
Well, I think that weaker rand is putting pressure on inflation. So it's difficult to get our inflation down. The rand at 19, oil prices slightly higher. So it's just making inflation a bit stickier. And I think, it makes it difficult for the Reserve Bank to start to cut rates. So I think not overly fantastic for our market at the moment. And, you need a slightly firmer rand to help bring down some of that sticky inflation like oil prices.
Indeed. Well, Rob, let's also get to the Fed's interest rate decision. Of course, something that inflation, of course, influences the SARB's interest rate decisions, but also we do have some influence from the Fed, and the central bank did kick off that meeting yesterday that will be concluded today. We will get that interest rate decision this evening. What do you make of the expectations there? I do understand that it is expected for the Fed to keep interest rates unchanged, but considering the hot inflation that did spook markets last week, do you think that we could get maybe a shift in the outlook for the path to rate cuts at this point?
It'll be interesting to see. Obviously, the rate cuts, some of them earlier in the year were for rate cuts now in March. That's definitely not going to happen, and it'll be pushed out to May. Some have got it down to June already, that it'll only be pushed out. So I think we won't get an interest rate cut today from the Fed, but it'll be interesting to see what they say going forward. I see Lagarde from Europe today was indicating that inflation is still a problem for them, and they're going to try, hold the course with higher rates for a little bit longer as well. So it's interesting to see what the Fed will say going forward. But there are definitely strains in the interest rate market across the board, in property and in a few other sectors as well, which you're starting to see strain and liquidity drain out of the system. People are starting to run out of free cash. So it'll be interesting to see what the Fed says and how long they're going to keep the rates up. We're expecting a rate cut probably in June from the Fed, and then we'll see if world markets follow from the Fed thereafter.
All right. Well, let's get into some of the company news that came out of the JSE today. Discovery coming out with its interim results on a normalized basis. We did see those financial metrics showing growth, a double-digit growth on that front. What's quite interesting is that we had a really deep reaction from the markets about 2 days ago when the company released its trading update. We did see that share price plummeting about 7%. A little bit of a comeback yesterday, a rebound yesterday, but not enough obviously to offset those losses that we saw 2 days ago. Not much reaction today. And I'm wondering what markets have gotten from those results, and if maybe there's anything different in these results compared to what we saw in the trading update.
Not really. I think that what's interesting is that Vitality for the first time showed really good growth overseas, mainly coming out of Ping An. So it just shows you that there still is growth out of China and out of Ping An for Discovery. That was a very positive set of numbers that came out for Discovery. Locally, they're holding their own. The bank's doing well, but the main issue is that they're still free cash flow negative. So they're still spending a lot of money on capex and on different projects throughout Discovery Life, Discovery Bank, and Vitality, and they're still not generating free cash flow. And I think in an interest rate environment where we are, where rates are so high, I think the market has seen that as negative. And if they can generate those good numbers from Vitality, and we see that continue over the next quarter, the next 6 months, and the next year, and it also converts into free cash flow, then I think you'll see a re-rating and you'll see Discovery come back up. But I think while they're free cash flow negative, market at these interest rates are saying that you have to be careful with Discovery on their balance sheet.
It's quite interesting because there was a time, I think it was last year, when investors were really punishing the stock because of that same reason, that you're spending so much money on these growth initiatives that are just not producing these profits that we want at this point. And I did have a conversation with Adrian Gore saying that, investors invested into Discovery because of that growth story. Do you think in some instances, investors maybe lose sight of that growth story and exactly why they went into the stock?
Well, I think, you waited a very long time for that growth, and I think Vitality was supposed to be one of the growth drivers, and it's taken a very long time overseas to generate the type of returns that they get from Vitality in South Africa into returns overseas. But these numbers were very interesting, and they were a really good set of numbers for Vitality. So it's the first time you've seen all of that capex start to produce some really good revenue. But I think the market is hesitant to say, well, now we're on the growth track, and everything's fine. I think you'll need another quarter, another 6 months where you see that growth in Vitality coming through, and then people will start to say, right, there is a growth story here, and we don't mind about the capex. But I think one set of numbers like you saw today in Vitality is not enough to get investors to say, well, everything's perfect at this stage. And then the bank as well, there's still a lot of capex going into the bank. The bank's doing well, but to get real good growth, you still need to spend some capex there. So I think we need another set of numbers like the ones we've just received in the next 6 months, and you'll start to get a turnaround on the Discovery share price. But investors are not running before the next set of numbers to invest.
All right. Talking about investing, Investec, let's go into that bank. They posted a trading update today, seeming that investors reacted positively to that. For the 11-month period, the bank expects headline earnings per share to be as much as 10.6% higher than the prior period. We did see investors, of course, still plowing in with that share price climbing 3%. Is this just a continuation of the positive momentum that investors have come to expect from Investec at this point?
Yes, I think over the last few years, Investec have cleaned up their bank considerably. They cleared out 91. They got rid of Bud, which was their private equity business, which you see in the results today. And they changed their property portfolio as well. They sold into Burnstone, which was the previous Investec property fund. So they've cleaned out the bank, and they're much more streamlined, and you're starting to see much better numbers come through the bank. I think these numbers were a little bit softer than people were expecting, but still, you're still seeing a much more dynamic business and a much more dynamic bank, and they don't have all of these once-off losses that you're getting from all of these different businesses. So it's a good business. The share's done exceptionally well over the last year and a half. I think its low is about 75 Rand. It's now trading about 122. So you've had a really good return. They're still paying decent dividends. But I think on this side that maybe the numbers are a little bit softer than people were expecting. But, the bank's a much cleaner business, and it's much easier to see the revenue growth going forward. So I think they're well placed now, and you just need interest rates really to come down, especially in the UK. You're starting to see that the UK is under immense pressure with interest rates, and you're starting to see a little bit of pressure come through the bank on the UK banking side. So a release in interest rates there will definitely drive these banks going forward.
Yeah, and I mean, you would say that the fact that you're seeing now, softer than expected numbers from a bank that, you would say is maybe more insulated from the headwinds than, the South African banks, it really speaks to the double-edged swordedness of the interest rate cycle.
Yes, I mean, I think inflation in the UK they've had inflation there they've never ever seen before. So I think it's taken people by surprise. And I think also it takes people quite a long time to change their habits and how they spend. And I think in the UK, you're starting to see that pressure come through, especially on the middle income to higher income. Obviously, ultra high net worths are still okay there. And obviously, Investec does bank some of those as well in the UK. But you're starting to see the UK under a little bit of pressure there. So they also need an interest rate cut. Obviously, on the interest rate higher side, they get more income from the higher rates. But I think that's starting to plateau now, and you're starting to normalize. And therefore, the bad debts and the strain on the bank is starting to come through now. So interest rate cut would be perfect for the banks right now.
All right. Well, hopefully things will be looking up there in the UK, as of course we did see today the inflation coming out and surprising to the downside, accelerating 3.4% in February compared to the 4% that we did see there in January. Rob, before we get to your stock pick, let's reflect on some of the counters that have found favor with some of your industry peers.
It's called Illinois Toolworks.
Oh, there we go.
First of all, they're a hugely American company, usually diversified. They do auto parts, they do welding machines, they do food services machines, they do electronic metering equipment. So you can see where it's based. It's based on the bedrock of American industry. As far as the American economy is concerned, we've got a sturdy economic growth and lowering rates. I mean, I don't think you can get a better economic environment. So as far as the domestic, shall we say, manufacturing sector in America is concerned, that's been left behind by all the hula about NVIDIA and all the tech shares. I think there will probably be a shift in investors' money towards that kind of company, that kind of industry. And Illinois Toolworks very well based on that. As I've said, they've have a constant record of dividend increases that spans, I think, almost 50 years. So they know what they're doing. And technically, graph looks right.
I am choosing multi-choice tonight. And the reason I'm choosing multi-choice is not necessarily taking a long-term view about video entertainment and what might happen to Showmax and what's going to happen to their betting business and the rollout of online television on your cell phone on the African continent. And those are all very nice, but it's because of the special situation of the offer from Canal Plus that is expected going to be made at 125 Rand a share in the next few weeks. That is the expectation. Now, the interesting thing here is Canal Plus is in a little bit of a corner, in my opinion. They have to make an offer based on what the takeover regulation panel has ruled, but they need the offer to be successful. There's a risk that they make the offer, they don't get enough acceptances to take them over 50% or whatever number they want, maybe even to take out the whole of MultiChoice Group, and then do the corporate action to make sure they solve for the foreign shareholding at MultiChoice South Africa, the subsidiary. So they need to make this work. And the MultiChoice group board obviously knows this.
Yeah.
So 125 might not be the final offer. And Canal Plus cannot risk the offer leading them not to take over the whole of MultiChoice Group, because then for a whole year they're not allowed to do anything, they're in limbo, and they might need to then force sell the indirect stake in MultiChoice South Africa. So given all these permutations, I think your downside is relatively capped if you buy below 110 Rand.
Okay.
Your upside is at least 125 Rand. Maybe it takes a year to 18 months for that deal to happen. Plus you could have another bonus if they do increase the offer, which I think is a distinct possibility.
My stock pick today is Sun International. Sun International just released some great results very recently, this week, I believe, showing record numbers from SunBet. We're also seeing, a 3.6 billion in free cash. So, I mean, I think that it's a very strong business, and they're showing major growth across board, especially with the online betting system. So, for my pick, it is Sun International.
All right, Rob, you have a good pick there of 3 stocks, Illinois Toolworks, MultiChoice, or Sun International. You can just choose one before we go to your stock pick.
Well, I think Sun International is well placed. I think there's too much risk with the corporate actions on MultiChoice. So I would say that Sun International's done an excellent job in fixing their business, and you're starting to see growth, especially locally. And they've got SunBets, which is doing really well. So I think, I think they're well positioned to carry on growth for 2024. So Sun International there would be my pick.
All right. And your own pick that you came with today?
Mine's offshore Next Era Energy. I think I've called for it before. They're a utility of energy, wind, solar, and gas on the east coast of the US. And, high interest rates have put pressure on these type of utilities. And I think as interest rates reduce later in the year, you're going to see a big recovery in the utilities, and they're in the right green space on utilities as well. And they've also had a court case that's gone in their favor recently. So I think you'll start to see much more traction in Next Era Energy, paying you a dividend and good growth going forward.
All right. Well, thank you so much for your time and for your analysis on what is currently moving investors' money. That was your midday market update with Robert Towell from Sasfin Wealth.